Thank you, Sakina. So good morning to all our attendees today. So welcome to our panel session on decoding the ringgit. So as Sakina has briefly introduced, I am Kaijek. Most people call me KJ for short. So I used to be the only KJ among my friends up until a certain very popular ex-health minister came into the picture. So, but jokes aside, I am truly honored to have served as your moderator for your session today. A topic that has rightfully piqued many people's interest lately, and is likely also what our participants today also have many burning questions on. So popular that the previous session also briefly covered it a bit. But I guess it would not be unfair to actually say that a nation's currency has often been a source of profound pride among its population. So as such, it is understandable why many people have been closely monitoring the ringgit's run or the week run over the past 12 months. So briefly, a bit of his history. The first sharp depreciation came around October last year when ringgit was hovering close to 4.7 to the dollar. But at that point, it never really exceeded it. So when it again turned more severe in terms of depreciation recently, over the start of this month, reaching the historical weakest point earlier this month, and has been hovering close to 4.8 last week. So it is worth noting that Malaysia is not alone in this situation. Several other currencies have also experienced similar depreciation. Although regrettably, as rightfully also pointed out by the previous panel, the ringgit is among the worst performers in the region. So I guess what is more intriguing, or for most of you, is why is this happening to the ringgit? And the most obvious culprit definitely is the rapid rate hikes in the US, and more recently, the concerns surrounding the global economic slowdown. So, but is that all there is to it? That is the question at the moment. Is the ringgit underperforming its fundamental? What does this mean for the Malaysian economy, and is there any possible mitigation strategy? So thankfully for us today, we are joined by 3 esteemed panel experts on the topic who will help us decipher the recent trend and also provide some valuable insights and foresights as to what to expect moving forward. So maybe let's just start by deep diving into the discussion and uncover what we are experiencing in terms of the ringgit at the moment. So first question, maybe just to understand the trend a bit more, I'd like to ask maybe Dr. Nizam. What are the key trends and patterns that have actually re-emerged in the Malaysian exchange rate over the past few years? And maybe oil prices still a major factor for the ringgit at the moment?
Thank you, Kajek, for the questions. I think the general trend for ringgit is pretty much like a linear trend. It's continued to depreciate and is closing towards, I think, like what mentioned, close to 480 recently. But then there were some periods of corrections. But then, more or less, we can say that we can draw a straight line. That ringgit has been quite on a weaker trajectory, especially since 2014 when the oil prices collapsing, and thereafter it having some problems to gain more traction during that time. Of course, there were also other factors at play. Obviously, things like scandals relating to 1MDB, of course, concerns over the political landscape in Malaysia, and also, of course, the trade war, and there were also the pandemic in 2020 and 2021. So these are all factors that has been affecting the ringgit, and of course, recently is the sharp increase in the interest rates in the US. And it's quite mind-boggling after a series of interest rate hikes in the US. More than 500 basis points, the economy continues to grow at 4.9% Q on Q in the recent quarter, third quarter recently. So it goes to show that the risk of further hikes in the US dollar is quite very much visible. And looking from the technical charts, it seems that the psychological barrier or the resistance level probably hovering around 480. And if it pierces from that point, probably we are looking at 485 thereabouts. If you look at the worst level was ever achieved, it was during 7 January 1998. It was at 4 ringgit and 88 cents during the Asia financial crisis. So of course, we are worried about the trends. But having said that, I think it's not fair to say that our fundamentals are not sound. I think the dynamics in 97, 98 compared to now is obviously different. Our banking system are highly liquid, well-capitalized banks, and in terms of the intermediation process is almost business as usual. And I think the risk management practices have been robust, and that would put check and balance in terms of how lending and borrowings could actually occur in a healthy manner. But I think it's just that we need to be mindful on the factors that drives the US dollar that can be short-term in nature. But there are also structural issues that also need to be mindful of. For me, I always look at the basic stuff like our food security. Yeah? The recent numbers that I saw from DOSM in terms of the import dependency ratio for onion, it's 100%. So it's very mind-boggling to see that numbers. Actually, for us, Malaysia, I think we are rich in terms of in natural resources, and we have a good climate for promoting agriculture. Having 100% import dependency ratio for onions, garlics 100%, ginger 85%, that's unacceptable to me. So these are the things that I would say are very structural issues that warrants for a clear policies that can help us to, perhaps improve our ringgit in the medium to long term. So that's my, perhaps I should stop there. That's my early takes on ringgit.
So perhaps next question is more say to Winston. In terms of your market experience, maybe what are some of the overlooked factors that are also important to understand the ringgit's performance recently?
Yeah. As you can see from the profile introduction earlier, I actually cover mainly fixed income market. So I try to add some views from the market point of view. And I think today is probably not a very good time to speak on ringgit, given the trajectory. But I do find it a bit a consolation is commenting on ringgit now or forecasting on ringgit now probably is easier than the 10-year US yield, which if you look at the volatility, the year-to-date movement in the dollar ringgit is probably a weekly range for the 10-year US yield. In terms of the weakness of the ringgit, as we have seen year-to-date down 7 to 8% versus the dollar, even on a trade-weighted nominal effective exchange rate basis, is also weaker. That's why you look at the ranking, as shared earlier, ringgit actually ranked towards the lower end. I think one of the key drivers really is the 10-year US yield. I mentioned this 10-year US yield is not really because I cover bonds, but really if you look at the correlations, like what happened in the past, it's actually not the first time. If you look at what happened after the taper tantrum, when there's a sudden spike in the 10-year yield, the ringgit also, dollar ringgit also increased in terms of the spot. The Trump tantrum in late 2016 until early 2017, that was actually the same. Last year, yeah, similar. The 10-year US yield was rising towards October. We are also seeing the peak in dollar ringgit spot at above 475. And similarly, this year, starting from, I think, July, August, September onwards, you see persistent increase, a relentless rise in the 10-year US yield. We also see the dollar ringgit spot going higher. But having said, there is a strong correlation between the 10-year US yield and dollar ringgit spot. The relationship is actually not symmetric. We don't usually see, let's say, a sudden decline in the 10-year US yield. Does it mean that the dollar ringgit spot will decline as well? It's not necessarily the case. So I think why the 10-year US yield is driving the change in the dollar ringgit spot is really because the 10-year US yield captures the risk sentiment of the market. And like I said earlier, the relationship is actually not, it doesn't apply to both ways. Because if there's a sharp decline in the 10-year US yield, it could actually mean risk aversion. And under this kind of market environment, we don't usually see the dollar ringgit spot going lower. So that's why the relationship is actually not a straight line correlation. Weaker ringgit tends to happen when there's a sudden spike in the 10-year USU, and of course, linking this back to another factor, I think, for the ringgit weakness is the portfolio flows, which is something I actually follow quite closely. But I want to point out a key cut-off timeline. It actually November, December 2016. We do notice that the correlation between the dollar ringgit and domestic portfolio flows has weakened quite substantially. Pre-2016, as we know, there was a period of huge QE inflows, 2010, 2011, 2012, and the QE tapered outflows 2013, 14, up until 2015. And those are the period where we see very high correlations between bond flows and the dollar ringgit spot movement. But after the enforcement of ban on offshore ringgit NDF trading, we have seen the correlation weaken. There's better stability in the ringgit, which is driven more by so-called real economy flows rather than the portfolio flows. So I think in the near term, we do share the views that the current weakness might persist until there's a better stability in the 10-year USU.
Thank you. So I mean, you want to add, or I'll just move on. Maybe I think next, because a lot of the factors you mentioned does seems quite transitory. A lot of risk aversion, a lot of panic selling, and some form of it is also just purely they are moving towards the US. But I think fundamentally, if you look at the valuation of the ringgit, maybe I would like to pose this question to the three of the speakers. Fundamentally, is the ringgit undervalued? Maybe you can start with Suhaimi. Just a quick.
Well, the simple answer is yes. Yeah, because you look at the current economic environment right now, we have, on one hand, I hate to say this, on one hand we have a current account surplus, but on the other hand we have a mounting debt. Yeah, and then we have a good, strong economy over the past few quarters, and we have a relatively low inflation rate. If we look at PPP, we are still relatively, a country where things are still relatively affordable. We can still buy stuff in a way cheaply. If we look at the Economist McDonald index, we are still relatively, a country where our currency is still relatively cheap. So undervalued in a way. So yes, the answer is yes. Yeah.
Dr. Nizam, do you think it's undervalued as well? Or?
Well, if you look at certain matrices like RER, NER, certainly our ringgit is undervalued. But the concern is, for instance, our NEER, nominal effective exchange rates. It has been hovering around 85 points for the longest time. To me, undervaluations, okay, it means there is an upside risk. That's the general thinking. But what about if undervaluation could also mean cheap? So we have some problems there. If you look at the ownership in MGS, it used to be more than half, 51% thereabouts in 2016, and currently is hovering around 35% in September. Similarly, ownership by foreigners in our equities market, it used to be 28% in 2013, but now it's just about 19%. So it goes to show that there's some issues with this undervaluation. On one hand, again, I hate to say this, on one hand it shows that the undervaluation connotes there's a great potential in our economy. True, I totally agree with that. We have natural resources. Our Malaysians, we really embrace democracy. You look at what happened in 2018, kan? The transition to the new administration, I would say it's quite seamless. So that's a big plus point for Malaysia. But I think there are certain things that it warrants for, again, perhaps something to do with policies now. In relation, for instance, in our recent budget, yes, the government is serious to make sure that the fiscal consolidation will continue to happen. Is this being reflected by the tabling of the Public Finance and Fiscal Responsibility Act? Is put in certain parameters, that's good. But I think we need to do more on that to make sure that at least our rating assessment is better. I mean, we saw Fitch rating put us at BBB+. And certainly their comments has been hovering around our public debt as the main concern. So I think this undervaluation has to be translated into something that warrant for upside potential. Otherwise, it will linger and continue to remain undervalued for the longest time. Yeah.
Maybe Winston, do you want to have a quick comment? Is it undervalued as well for you as well?
Yeah, I have to say yes as well.
So seems all the
But
panel,
we do have an in-house model, our colleagues, using the beer or behavioral effective exchange rate model, using like the current account, rate differential, inflation differentials, as well as the net change in foreign assets. It does suggest that it's currently moderately undervalued by a few percentage points, although I think there were some studies that the undervaluation of a currency can persist for years.
so it seems that all three panel members do see the ringgit as being undervalued. That's the conclusion. But I think a lot of it is also to do with a lot of why is it undervalued. Perhaps it's also to do with some of the emerging risks that we are seeing at the moment. So, given the fact that it is sort of a global phenomenon, but seemingly why is the depreciation in the ringgit similarly more severe than the other regional currencies? So are we maybe facing some structural issues? Is it purely just like you mentioned, the import dependency or some form of market structural issues that are causing this sort of transitory financial issues? So maybe I'd like to pose that question to Suhaimi.
Well, okay, it can be, this is, to determine whether the ringgit is influenced by structural or even transitory, I think it needs a very deep analysis, but it can be both, right? Structural, yeah, we have been going through, of how many governments so far over the past few years. They are trying to change, and then come another government trying to do another policy change. So it has been trying, there have been efforts to change, the way in terms of the policy, economic policy, structurally, how it is managed in terms of fiscal policy, in terms of education policy, so on and so forth. Yes, we need to do a lot of work on that, and it is work in progress. I think the new government is trying, and it's not going to be overnight. It takes years. So that's for one, structural. The other thing is, it could also be transitory because we have geopolitical issues. We have 2 wars going on right now, and possibly another one in this part of the world, hopefully not. So, those are the things that we need to be concerned of, and every time that is where the ringgit is susceptible to fluctuations, especially when we are a net exporter of commodities like oil and gas, and also, palm oil. So these are the things that, depends on what happens, in the global economy. And of course, there is also the, the debt levels, as I mentioned earlier on. We are still struggling to manage debt, which is, in the region of 1.2 trillion right now. So the debt headroom for the government in order to finance fiscal deficit is getting smaller and smaller because we have limitations on that based on statutory limits. So there needs to be some sort of effort, a more serious, more like, a government political will to do something about the economy, especially on the fiscal side, our revenue side. They need to be, tax revenue need to be broadened, A lot of people are quite surprised why, the GST was not introduced, reintroduced, or other efforts to make sure that our deficit will be reduced and we will be able to manage our fiscal debt in the long term.
Thank you. So I think next, since we talk a lot about the valuation, definitely there is also some downside and upside risk. So in terms of, like, say, risk and vulnerability, maybe to Winston, to what extent are external factors such as, like, the trade tensions, and I think even recently the Fed has also been going the message that the interest rate in the US will stay higher for longer. So how would that impact Malaysia's ringgit's risk and valuation in that sense? Yeah.
I think market is pricing for higher for much longer and higher forever, judging from the repricing in the long end of the curve, 20-year and 30-year has gone up to close to 5%. Yeah, significant implications. I think earlier we talked about 10-year US yield differential. Yield differential is actually different from rate differentials. Yield differential is more on portfolio flows. Rate differentials, I want to share interesting data about the Malaysia banking system. If you look at the share of the foreign currency deposits on the onshore banking system, it has actually gone up quite substantially. I think pre-GFC, it was like close to 2% of the total deposit. Post-GFC, it has gradually gone up. Post-2014-15, the ringgit depreciation has gone up to 6-7%. And after COVID, it has gone up to a new high of closer to 10% of the deposit. I think it's probably due to a combination of factors, growing affluence, and growing awareness for the people about the need, especially for the affluent individuals, to diversify their assets to foreign currencies. US interest rate, whether it will stay high for longer, I think, frankly, is everyone's guess. We tried to guess. We thought the US Fed funds rate is going to top at around 4%. It wasn't the case. It has gone up further to 5.5. Although we do believe that currently is actually near the peak. And in a high inflation environment in the US, if you look back, for example, to the 1980s, high interest rate is usually not a one-way street. And what I noticed is high inflation environment usually translate into a high interest rate volatility environment. That means, yes, interest rate is high. Yes, the expectation is high for longer, but the change can be sudden and abrupt. And the cut, when it comes, it could be quite substantial as well. So I would actually watch out for potential risk there, because even if dollar ringgit spot, let's say, is higher, you got a rate differential, you get additional 200 bips pick up for parking your money, your liquidity in dollar. Per annum, you get 200 bips extra. If you park it there for 2 years, you get 400 bips. 3 years, 600 bips. But FX, dollar ringgit spot can move 5 to 10% in a year. So going out now, does it mean that it's catching the high on dollar ringgit? Again, it's everyone's guess. But the market can be quite volatile and rate high, but not necessarily last for longer.
Because we do have a related question from the audience. Foreign equity ownership going down to 19%, is it due to lack of confidence in Malaysia's policy and just market in general? Does it have to do with policy, or do you think it's more related to, say, current pricing of US rates?
I think it's related to US rates. It's also about the relative performance. Because nowadays, investors are quite global. It's not just regional. When given the options, people will want to seek for higher return opportunities. And actually, I would like to answer this question with a question. Just if, I'm making a big if the KLCI past 10-year performance, as we know, has been quite sluggish. If the KLCI performance can generate a total return of 5 to 6%, would you, or would many of us still want to go take the FX risk and go to invest in foreign equities? If the KLCI can generate 5 to 10% consistently a year?
That's a very good question, which I think leaves food for thought for everyone. But I think definitely markets are generally always profit chasing, so definitely there is some factors to actually decide on that. But I think for the next question, more on, say, government policy side, maybe to Dr. Nizam, what are any foreseeable changes in terms of government policy? And also related to a question from the audience, Malaysia seems to be quite obsessed with the ringgit. Is it also partly due to the low wage and foreign worker sort of structural issues that we are facing at the moment?
Okay, on this question, is it cheaper wages?
Yes, cheaper wages.
Okay, I think, of course, there are a few factors at play. I think the business environment is very competitive, and there's a lot of compliance costs, when SG will also in the picture. Of course, it will result in additional compliance costs for the business. Then that would result in how the business will actually try to navigate this. And looking at the manufacturing sector and the trends in terms of our reliance on low-skilled foreign workers, we can safely say that the low-cost business model has actually prevailed. So this low-cost business model, perhaps is one of the key factors why it drives cheaper wages, because we can see the trend in terms of the overseas remittance is on the rise. It's also affecting our ringgit in a way. And the rise in terms of our high dependencies towards foreign labor. So I think obviously we need to look at ways how we can change the way we produce our products and services, one that is requiring high value added activities. So of course these changes will require time and resources, and we may not see it to happen in a very immediately, obviously. So it requires tenacity in terms of the policy design. So I think this wages issue it requires time for us to see the outcome. Yeah.
So maybe since that there are a lot of issues, I wouldn't say a lot, there are definitely some structural issues with Malaysia, but maybe what we can explore next is also in terms of mitigation strategies and what can the government actually do. So it also ties in, I guess, a very interesting question from the audience. If you are a personal economic advisor to a finance minister, what would be your advice to actually strengthen the Malaysian ringgit in the long term? I mean, personally, I would definitely means that there is definitely some structural issues. So if we solve that, that would be upside. But I also like to hear what the panel speakers have to say. Maybe we can start with Suhaimi. A tough question, huh?
Yeah. The reason why I'm not a personal economic advisor is why I'm sitting here now. Okay. All right. Maybe it's a bit crazy, but I think I think first thing they need to do is to put the house in order. I'm talking about politically. Yeah. When everything is more stable and you have a strong leadership, okay, that's the most important point. But of course, you can't say that to your boss, right? And but I think the other thing that I would like to say is look at, outside the box. For instance, we have I think, maybe look at the possibility of refloating the ringgit, and work towards that. What are the strategies to eventually refloat the ringgit so that we can see how we really stand in the free market? Currently, it is very much being coddled, being controlled, I hate to say this, but, obsessed. Authorities are obsessed about really making sure the ringgit is stable. This is good. This is good for the country because once you make the currency stable, it's good for the economy, blah, 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 economy, business, and also on and so forth. But work towards one day, trying to aim for that. And also on the reserve, external reserves management, maybe look at the possibility. Of course, they're working on CBDC. Bank Negara is working on CBDC, which is good. Wholesale may be workable, retail maybe not so. But maybe, consider putting, one of the component of the reserve, maybe you put in the Bitcoin there, for instance, invest, put there part of reserves and see how, it doesn't hurt. unless there is some policy, I don't see any reason why governments so concerned about cryptos. But at the end of the day, it's something that is the future of the future currency, the currency of the AI generation. So something that we can consider.
So you mentioned about central bank digital currency. Do you foresee it to actually really help, like say the fiat currency, or given its better, faster settlement?
Oh yeah, I'm actually I'm for it because it's going to be more transparent. I mean, it's going to be, a lot of people don't like it. What do you call this? Government. I mean, watching your back and whatnot. But in a way, it can reduce costs. It can, speed up transaction. These are the things that will be beneficial for, and also to bank the unbankable as well. So these are the good things about going digital. Yeah.
Because if can also get your view on, because recently the government has also been putting out that message. They also attempt to sort of de-dollarize in a way of reducing dependence of using the dollar when settling international trade. Do you think that is a meaningful sort of policy change? Or?
Yeah, I think that's one of the things that I think is moving towards floating the currency. I mean, internationalizing or moving away from managed float. This maybe not in the near future, maybe, you're looking at maybe more than, years ahead. So if the government is looking years ahead, maybe this is one of the first steps they need to do to work towards that. But must remember, if you de-dollarize, the cost of invoicing will be higher, because a lot of businesses need to adjust, yeah. So these are the costs you need to and whether the government can subsidize that, that's another issue, right? So these are the things that I can think of. Maybe, my fellow panelists could add on to that.
Do you have any views on the usage of non-dollar to settle external trade? Or have you seen any meaningful change so far, actually?
I saw the Bank Negara has been using LCSF, the local currency settlements facility for Thai baht and also Indonesian dollar. And we talk about a lot, about US dollar, how it can affect our ringgit. I think it's only right that we need to promote using non-dollar trade settlements, like considering that the volatility that we are in now is so unpredictable. And I think by having this arrangement could actually help us to insulate this unnecessary headache, so to speak.
So given that, I think, say for example, I think China has also been pushing to move away from the dollar. And given that Malaysia has a very large trade relation with China, do you think like maybe using, is it possible to use other currencies such as the Chinese yuan to actually settle some of these transactions? Do you think it's possible? Is it feasible at the moment? Because we all know that China's financial system is relatively closed. Do you think it's a possible alternative?
Definitely is. I mean, because our proximity and our enlarged trade relationship with China, the second biggest economy in the world, definitely it will, And also, you'll talk about the US, the exorbitant privilege. I think has been going on for century or so, maybe now. So it's about time that we see some form of alternative to the US dollar hegemony. I mean, you have, because US dollar, 70% world global funding is in US dollar. Then I think about 40% in invoicing and about 50% or 60% in reserves. Oh, 60% in reserves is huge. So in order for to reduce those ratio back to other currencies, especially other more stable and more stronger currency, it's a way to go. Yeah.
So we did discuss quite a few sort of policy mitigation strategies, but I think there's definitely always calls for more government intervention, especially I think recently also we do see that people are talking about the possibility of using OPR as also a form of intervention by Bank Negara. So do you think, is it a meaningful form of intervention, or should the Bank Negara actually step in to raise the interest rate, or is there any alternative ways of actually intervening? Maybe I can start with Winston. Do you have any views on policy rates?
Actually, I share the view of an earlier speaker, I think Julia, about using OPR to defend currency is probably not ideal, and if I may say, not effective. Because if we look at what our neighbors, Indonesia, they just hiked rate recently. And it's actually not the first time. It's very often Indonesia use interest rate to defend the currency. But we have seen time and again, it's actually not the best tool. Of course, if you look at the Malaysia OPR Fed funds rate differential, currently is very wide, almost 250 bips. And it's actually the widest on record, even wider than the pre-GFC. But if you take, let's say, a closer look, instead of the headline rate differential, if we look at the deposit rate differential, what are we getting from 3-month FD in Malaysia compared to the dollar? It may not be that wide. And if you look at the interbank curve differential, Malaysia CLIBOR has gone up compared to the US SOFR curve. The differential may not be that wide.
Dr. Nizam, what do you think about, say, the policy rate? Do you have a view on that, on the OPR?
Yeah, I totally disagree using OPR to address currencies. I think it will backfire because we can see that the economy is struggling when the OPR is actually increased. Those especially that has variable rates, and obviously it doesn't serve the purpose. I think whatever you do, we need to be mindful of your policy objectives and the implication. And interest rate is a blunt tool, yeah. And I think we sort of reach the so-called terminal rates. And if you do it more, if you overkill it, then I think it will be counterproductive. So I think we need to be mindful the policy options in addressing the ringgit. To me, ringgit, it's like, to me, if I can liken it to share price, it's a reflection of company's performance. So is it the company's business to intervene and do a share buyback to boost up the share value? No, I don't think that's an ideal situation. Obviously, to focus on what you do best, and the outcome will be the deciding factor, whether the currency will actually appreciate or otherwise. So I think that should be the narratives and the best way of dealing this currency weakness. Yeah.
So on a sort of a related question, we do see our audience ask about, do you think the removal of capital controls on Malaysia will actually appreciate the ringgit on the longer term? Maybe so. I think you have a view on that.
I think there's not much of capital control. We have limits on trading of NDFs, non-deliverable forwards, which I think it took 2 years after that to regain the average volume, I think, of the trade of the ringgit. So, at the height, it was what, 15 billion a day. Now it's about 57 billion a day, the highest. So, it goes to show that Bank Negara achieved what it needs to achieve, which is bringing back price discovery onshore instead of offshore. Instead of allow the non-deliverable forwards being dictated by other parties, now it's back onshore, which is again, the obsession of control and of the ringgit to make sure that the ringgit is stable. In a way, it's indirectly control. But then again, I think it depends. I think situational, that the authorities or the monetary authority, regulators, to make sure that, the ringgit is stable, we need some sort of control because we are a developing country. We're not like, a very rich country yet, So eventually, yes, we need to, there are a lot of criteria we need to achieve, a lot of requirements for us to achieve a stronger economy before we can eventually remove currency control, refloat the ringgit, and all those things. It may take years. So yeah, that's where I think it's the way to go, as I said, in order for us to, maybe we don't have to talk about ringgit anymore. We just say, okay, things are running smoothly, no need to, have a coffee talk on the ringgit. That's, everything is, let's talk about something else, So,
yeah.
If I may just clarify on the questions, I think I'm mentioning about capital control, which probably means further liberalization. So I think certain rules are needed. I don't think Malaysia have capital controls. Certain rules are needed under the Foreign Exchange Administration rules. For example, residents are not allowed to, with borrowings, are not allowed to bring certain amount of money to foreign currencies, including the companies. So these rules are necessary to help the orderly functioning of the market, because certainly Malaysia ringgit market, the financial market is not as big or liquid as the dollar, euro, or some majors. There is a limit in terms of how much the capacity of the intermediary like banks, they can intermediate the flows. So for example, the BNM notes, the QE inflows in 2010, 11, and 12, huge inflows. But in 2014 and 15, huge outflows. And these inflows tend to come gradually over a long period of time, 1 to 2 years, but they tend to go out within a short period of time. So that's why certain rules are needed. I don't think we have capital controls, but certain rules are needed in order to help with the orderly functioning of the market.
Thank you for that. So I think we have unfortunately run out of time, but just to summarize, I think the panelists do agree that the currency is currently undervalued. There's no capital control in Malaysia, although there are some rules that we need to follow, but and hopefully we won't need to have a coffee session on the ringgit anymore if we manage to solve all these issues. So thank you for your time. Thank you everyone for your attention. Thank you.